Good afternoon. I'm Brent Wilsey, and welcome to today's Smart Investing Briefing. And it's Friday afternoon, almost 4 o'clock here.
Almost 4 o'clock. I'm getting ready to go home. It's Cinco de Mayo. We got festivities. Maybe do some salsa today.
Have some burritos.
Yeah, exactly.
Well, anyways, today we're going to talk about 70% of filers are getting a federal refund. That's a lot of people in a refund, but I think before we do that, do you want to comment on that first?
What, unemployment?
Yeah, I want to talk about unemployment real quick for people. 2001 is the last time we saw unemployment at the current rate of 4.4?
4.4%.
Low.
That is, how long ago was 2001? That's what, 16 years
16
ago?
years ago. Yeah, you were like 5 years old. No,
8 years old.
8 years old. Yeah.
Close though.
But yeah, some good numbers, and job creation was up and so forth, so they look pretty good. And
we saw some wage inflation, which is of course important. Still not as strong as I think it should be, and I think 4.4% is very, very close to that full employment level. I think if it continues to decline, we're already seeing people, it's hard to find good quality workers, so that means it's going to cost more to find those good quality workers.
I think that wage inflation is going to come up and sneak us by surprise. It's going to come up like, oh, how did this happen all of a sudden? So be aware of it. We keep talking about it's going to happen, and again, maybe it's time to ask for a job raise. Not you, Brianna. So you just got one. All right, let's talk about 70% of the filers are getting a federal refund. This is just amazing that many people get refunded. They should be doing it now because this is what, May, you probably filed your tax return late March, April, you're probably getting it now. And the average refund, this surprised me as well, there should be a boost for the economy, was $2,897. That's a nice refund to put in your pocket.
Oh yeah, that is nice. And you know what you should do with that refund, but a lot of people won't? They'll go spend it, which will help the economy.
Yeah.
You should put it right into retirement savings, because then it compounds and you get that tax refund for next year.
That's right. That's right.
It is the best thing you can do.
And if you need help on that, give us a call. We'll tell you how to invest that into an IRA. And I'm amazed the lack of, how do I say this, how much productivity is lost about the number of hours spent working on your taxes.
That number, 6 billion hours. Gosh, I mean, you multiply that by $15 per hour for the minimum wage for a lot of places nowadays. It's a lot of money.
It's a lot of money, a lot of time wasted. 6 billion hours, that's a lot of hours there.
Exactly. And this one, you want to talk about an efficient business. Well, it cost the IRS 35 cents to collect $100 in federal revenue. That's an extremely high profit margin.
Yeah, and I don't know how they do that, because that's an incredible number. 35 cents to collect $100. It's worth repeating. I mean,
that's a 99.65% profit margin.
You knew that ahead of time. You didn't figure that out in your head.
I just figured that out.
Oh, man, you're pretty good. All right. All right. Well, that's about a company that relates to this, and this company is Intuit. The current price around $126. Their 52-week high is $128.45 with a low $99.25, so close to that high. And you may recognize the name, maybe not, but it's QuickBooks and TurboTax. So
those have both become kind of more popular as we've seen more and more people try and do it by themselves. Maybe that's why we've seen so many hours done on taxes. 6 billion people are trying to figure it out. TurboTax and QuickBooks, and I forget the other software that's out there, I believe, that you can do your own taxes. Yeah. But anyways, sales up 13.1% over the last 12 months for this company, and earnings per share looking very good, up 20% for the last 12 months.
And the price of sales, about 6.6. The average of the industry is 6, so a little bit pricey there. Price of cash flow, 31.5, well above the industry at 18.8. So you seem to be paying up for those sales and earnings. I don't like seeing that.
And I don't like to see this very strange balance sheet. Don't know why they have so little in current assets or so much in current liabilities. And I say that because the current ratio is just 0.6.
Right.
That tells me they do not have very much liquidity. Looking at the debt to equity, 146.5%. And the reason that I think their current ratio is so off, long-term debt to equity just 59%. So it tells me they have a ton of short-term debt on the balance sheet. You gotta understand, can they pay that debt off with that current ratio? Doesn't appear to be the case. So they're gonna have to take on more long-term debt or extend credit facilities, whatever it may be, to replace that current debt situation.
And don't forget, too, with a company with this much in short-term debt, their risk of rising interest rates, paying more for that debt, kind of like rising mortgage. So think about that. Make sure the company does not have a lot of short-term debt in a rising interest rate environment. Very disappointed here on the earnings going out to July 2018, $3.98. Gives you a target sell price of only $65.67. Not good at all. Don't want to pay up for those earnings like that. I think this company, I'm going to say, you should sell this company if you own it.
I would have to agree. A lot of excitement again around but it's technologically based for taxes. It's going to be great,
So what?
So what? You never want to overpay for those earnings, sales,
That's
book
right.
value, whatever it may be.
That's right. Well, I hope you enjoyed this edition of the Smart Investing Briefing. I'm Brent Wilsey. If you want to have more information about our company or investing, give us a call at the office, 858-546-4306. And also, too, we have a workshop coming up pretty soon, don't we?
Workshop May 25th. Again, all this, it's like, what are these guys talking about? Current ratio, cash flow? I don't know what they're saying. Come to our workshop again, May 25th. We'll be at the Butcher Shop giving away a dinner to you, nice dinner workshop, talking about how we invest here at Wilsey Asset Management. To register for that workshop, it begins at, check-in 6:30, I believe it is.
Check-in starts at 7.
So to register for that, go to our website.